What if the world's most dominant currency, trusted by nations, investors, and institutions alike, was also its greatest liability? The US dollar is the backbone of the global financial system, a linchpin in trade and the world's reserve currency. But even this giant isn't invincible. Today, we'll explore the forces behind the dollar's unparalleled dominance, how it ironically shields the US from a crisis of epic proportions, and how this dominance sets it apart as the last fiat currency to collapse. From geopolitical strategies to energy markets and the quiet cracks forming in the foundation, this story reveals the dollar's dual role, both as a pillar of strength and as a harbinger of a new monetary paradigm. This video is produced by the team at Capitalist Exploits. Headed by professional asset managers Chris McIntosh and Brad McFadden, the team hunts for deep value assets that are surprisingly contrarian despite strong fundamental cases for potential future appreciation. If you're looking to gain access and insight as to the personal investments of active hedge fund managers and in-depth reasoning as to why they've invested in the assets they're sharing, check the links in the description below. You'll get access to advice on how to allocate, organize, and think about your portfolio, while joining a growing community of people thinking outside of the box. Enjoy monthly updates, open Q&As, regular newsletters, a community forum, organized portfolios, investing education videos, and more with the Capitalist Exploits Insider subscription. If you're not ready to fully take the leap, we also offer the Capitalist Exploits Insider newsletter series for $1 for the first 30 days and $35 a month thereafter. Do note, our investing strategy and philosophy can deviate a lot from the mainstream. We offer a money-back guarantee regardless, but make sure you're on board with our investing philosophy and global outlook before deciding to join us. The US dollar is unmatched in its global reach, thanks to a combination of economic, geopolitical, and institutional advantages that no other currency can replicate. As the world's reserve currency, over 60% of central bank reserves are held in USD. Why? Because the dollar is backed by the depth and liquidity of US capital markets, unmatched by any other nation. This trust extends to trade, where commodities like oil are almost exclusively priced in dollars, a system known as the petrodollar standard. This arrangement forces nations to hold vast reserves of dollars to purchase energy, reinforcing its demand globally. Moreover, much of the world's debt is denominated in USD, particularly in emerging markets. As the Federal Reserve raises interest rates, the cost of servicing this debt rises, creating a relentless demand for dollars. This feedback loop strengthens the dollar even during economic downturns, making it the default safe haven for capital flight during crises. The dollar's dominance also benefits from network effects. Trade contracts, financial instruments, and global institutions are deeply entrenched in USD systems. Even as rivals, like the Chinese yuan, attempt to challenge its supremacy, they lack the liquidity, trust, and global adoption that the dollar enjoys. Amid growing fears of sovereign debt crises around the world, the US dollar stands apart. While other fiat currencies buckle under inflation, fiscal mismanagement, and geopolitical instability, the dollar remains resilient for several reasons. Don't get us wrong, the dollar still suffers from these and more, but it'll be the last man standing. Firstly, it's the weaker currencies that will collapse first. Emerging market currencies face far greater risks, from volatile capital outflows to domestic inflationary spirals. Nations reliant on dollar-denominated debt often devalue their own currencies to stay afloat, creating a domino effect of collapses well before the dollar is affected. Second, the dollar's status as a safe haven currency amplifies its strength during times of global turmoil. When instability strikes, whether due to war, financial crises, or economic uncertainty, investors turn to US treasuries, driving up demand for dollars. This dynamic insulates the US from the immediate risks of a debt crisis, even as it continues to accumulate record levels of debt. Finally, the dollar benefits from its role as the global central bank. The Federal Reserve's monetary policy decisions ripple through global markets, dictating borrowing costs, trade flows, and capital allocation. This centrality ensures that even with challenges, the dollar retains its dominant position. A fascinating theory adds yet another layer to understanding the dollar's unique position, the dollar milkshake theory. It provides a great explanation as to why the dollar continues to dominate even as global financial instability rises. The theory suggests that the dollar acts as a liquidity vacuum, siphoning capital from weaker currencies. As global instability increases, investors seek refuge in dollar-denominated assets, inadvertently strengthening the currency further. This dynamic creates a vicious cycle where the dollar thrives on the collapse of others, consolidating its position as the last fiat currency standing. However, the theory also highlights the inherent fragility of this system. While the dollar may be the strongest currency, it's not immune to the ultimate collapse of fiat currency, a reality tied to unsustainable debt levels and declining trust in paper currency in general. So, while the dollar remains dominant, it's not without its challenges. De-dollarization efforts and shifting geopolitical dynamics reveal cracks in the system that could threaten its long-term supremacy. Emerging powers like China and Russia are leading the charge to reduce reliance on the dollar. Initiatives like bilateral trade agreements in local currencies, the accumulation of gold reserves, and discussions around a BRICS reserve currency underscore their desire to break free from US financial dominance. While these efforts lack the scale and trust to dethrone the dollar, they signal growing dissatisfaction with its central role. Moreover, the dollar's weaponization as a geopolitical tool has unintended consequences. Sanctions, trade restrictions, and exclusion from dollar-based systems have prompted adversaries to seek alternatives. For example, China's Belt and Road Initiative often sidesteps the dollar entirely, fostering trade corridors that reduce dollar reliance. The rise of gold as a reserve asset is another subtle challenge. Central banks, particularly in emerging markets, are diversifying away from the dollar by stockpiling gold. This shift reflects a gradual erosion of confidence in fiat currencies, including the USD, as nations prepare for a potential reset. For investors, the dollar's dominance offers a dual opportunity, leveraging its current strength while preparing for its eventual decline. Here's a couple tips for you guys that we're using at Capitalist Exploits HQ. First, capitalize on short-term strength. The dollar's safe haven appeal and elevated interest rates makes US treasuries and dollar-denominated assets attractive in the near term. These investments provide stability and predictable returns, particularly in volatile markets. Second, diversify into hard assets. While the dollar's fall may be distant, we believe it's inevitable. Accumulating hard assets like gold, silver, and real estate offers a hedge against the long-term risks of fiat currency collapse. These tangible assets retain value across economic cycles and provide insulation against inflation. Thirdly, focus on commodities and infrastructure. Energy, agriculture, and other essential commodities are poised to benefit from the dollar's eventual decline as they're tied to real-world demand rather than fiat systems. Infrastructure investments, particularly those generating income, offer similar protection. But what happens when the dollar finally falls? Let's explore the seismic shift that could redefine the global financial system. When the US dollar collapses, it'll mark the end of the fiat currency era as we know it. But this collapse won't happen in isolation. It will follow the fall of weaker currencies, leaving the dollar as the last domino to fall. By this point, trust in fiat money will have eroded globally. The collapse of the dollar will likely trigger a period of hyperinflation, economic upheaval, and a reset of the global financial system. Nations and investors will turn to alternatives, commodity-backed currencies, decentralized digital assets, or entirely new monetary paradigms. The transition to this post-dollar world will be chaotic, but those who anticipate it will be best positioned to preserve and grow their wealth. Understanding this shift will be essential for navigating the end of the fiat era. With all that said, the US dollar is both the keystone of the global financial system and its ultimate weak point. Its unparalleled strength shields the US from an immediate sovereign debt crisis, but its eventual collapse is inevitable in a world of unsustainable debt and monetary instability. As investors, the key is to recognize the dollar's dual role: a short-term safe haven and a long-term liability. Use its strength to prepare for what comes next, because while the dollar may be the last domino to fall, in our opinion, fall it will. Do you want to learn more about navigating the end of fiat money? Check out the links below to gain access to the specific plays we're looking at and even more in-depth discussion about fiat money and how we're actively investing with these possibilities in mind. Don't wait, start preparing and protecting your money today. The research used in this video is available in the description below, and thank you so much for watching, and remember to stay informed.